Welcome to All That Matters, a show about what's really worth your attention in the markets and economy today. Join hosts Michael Antonelli and Ross Mayfield as they tackle the latest headlines and answer real questions from clients.
Welcome to All That Matters with Mike and Ross. Mike, it is 2026. The big story of the year so far, the only story of the year so far, is this vertical move in precious metals, gold and silver. It's all we're getting questions about. You turn on the news, it's all anybody's talking about. Luckily, you were on the case. You wrote a great blog about this last week. I'd encourage everyone to read it. I'm sure we'll link it somewhere in the description or in the editorial here. But I want to turn it over to you to just do this topic again in real time with me.
Yeah.
And I want to start with what's happening. What's driving this move? What do you think are the drivers of this? And you've got some experience trading metals and commodities. So let me hear some of your expertise on this.
Yeah, so I wrote last week when gold and silver started going crazy and clients and advisors like, what's going on? I wrote. So hopefully you're reading this. Ross and I produce content for you all the time. We're hoping you receive it. I wrote a blog that said, let's talk gold and silver. And I said, these are the 4 reasons I think that it's moving. Number 1, worries about global debt and money printing. That's always the backdrop of gold and silver investing. It's just central banks want to own hard assets and that not money printing. Like that's always in the backdrop. So it's in the mix. Okay. Number 2 is the role of the United States going forward. There's a lot of international investors that are kind of they have some concerns about the way that we're going, and they're kind of selling some U.S. assets and put it in a gold and silver, right? That's in the backdrop also. But number 3 and 4, I think, are more important. Number 3 is there's a whole financial industrial complex around gold and silver, right? There's ETFs, there's levered ETFs, there's futures contracts, there's crypto is actually buying gold and backing their crypto with it. There's all sorts of competition for gold and silver that's causing prices to kind of get out of whack. And, you know, if there's concerns about silver supply or gold supply, that's going to manifest itself in the price. And the fourth one is the memification of gold and silver. And what does that mean? I don't know if you remember GameStop and AMC back in the day, where a bunch of retail investors got together and like, oh, this kind of struggling retailer, we can invest in them and it'll take off and the price will go up and we'll all get rich. They kind of memify it. And that is happening in gold and silver also. How do they do it? What's the telltale signals of that? Lots of call option purchasing. Our friends at Stratega said there were close to 4 million call options bought last week on silver. That's retail doing that. Here, in China, everywhere. And they memify it by just rushing all together into it at the same time. And that, my friends, I think number 3 and number 4, kind of the amount of people competing for it and then the memification of it, caused gold hit 5,500 and then silver hit 120. By the way, gold's down to 4,600 and silver's down to 76. They collapsed last week. Those are what I think is happening, Ross.
Yeah, I think you're 100% right. The last point is really important. I mean, we've existed in a world for decades of a backdrop of rising debt, rising sovereign debt, in the U.S. and abroad, even in the last decade of trade wars and weaponization of the dollar. So the backdrop of this move is not really new. I mean, maybe it's amplified in recent months or years, but those things have been around. So then why all of a sudden is the chart of gold a vertical line? Well, it's what you said. It's leverage, and it's retail traders that have kind of latched onto this in the same way that it was meme stocks and SPACs, in the same way that financial assets have had this happen to them for decades. So
yep.
The FOMO and the retail chasing, I think, is the kind of segue into the next question, which is really the important one, right? Especially since we put these episodes out to talk directly to our clients and our advisors. What should a person do with this information? Say, okay, maybe that explains why it's going up or what's happening in these markets. What should I do? What should a wealth management client with maybe a 60-40 and a few other assets here and there, what should I do with this knowledge or with precious metals in general in my portfolio?
So I sat down and I tried to write down every reason a wealth management client or a retail client would own gold and silver. And I came up with 5. I think these are the 5. If there's another one, I'd love to know. But this is what I came up with. Number 1, the price is going up, which is not a very good reason. Okay. If your whole reason is the price is going up, FOMO, danger, easy way to lose money, that is not a very valid reason to own gold and silver. Number 2, I think the world is shifting away from the US to a more global system. Okay, so you think that, maybe the dollar is going to have a little shift. You think maybe it's going to be more of a global new money order. Okay, maybe a small allocation makes sense. You want to talk to your advisor about that. But know that is a decade-long play. What you're saying there is a 2-decade, 3-decade long play. Okay. Number 3, I'm worried about the collapse of the dollar. If you're worried about the collapse of the dollar, are you worried about everything else in your portfolio? Like cash, bond stocks. Are you worried about all of those also? Because if you're worried about the collapse of a dollar, that's going to be a tough reason to hold anything, frankly, right? So number 4, I want something to use when the financial apocalypse happens. This is the worst of the reasons I think that you're never going to be able to spend gold and silver at Walmart or pay your rent. And that's just not a valid reason to own gold and silver, right? That's apocalypse stuff never happens, right? And then number 5, I want to diversify into something that doesn't move with anything else. Great. Of all the 5, if you say to your advisor, hey, we got this, we got a great allocation, maybe a small allocation to metals makes sense because I want to diversify my holdings, that's worth a discussion at least of the 5 reasons, Ross. That's what I came up with. A couple of them are kind of cynical, but I think in general, metals investing is often some expression of a view that I think something's wrong with the world and I'd rather own a rock, right? That's it, in some ways.
Yes, these are assets that have no cash flows associated with them. In the case of gold, has very little industrial value. So you're talking about a true store of value. It is a shiny rock. It is something that you hope will hedge against calamity, inflation, geopolitical risk. Sometimes it works, sometimes it doesn't, right? But that is the idea, right? And it is a bit cynical. And I think to be a good long-term investor, you have to be a bit of an optimist, but I think you have to survive too, right? And diversification and hedging against certain risks with something like gold that moves differently, has different drivers. I think the way you said it is perfectly. It warrants a conversation, right? I think there is a decent argument that post-COVID and with all this trade and tariff stuff that we are heading into a version of the world that looks different from the one we've existed in. And I still think you should primarily own stocks and benefit from capitalism, but one where maybe alternatives or real assets can add some diversification to your portfolio. The kind of irony of it is that is the opposite of what we're seeing right now. That is, as you mentioned, diversification. Yeah. That's a long-term play. That takes 10, 15, 20 years to bear out the benefits. Whereas what we're seeing now is a price go vertical in 3 months and people want to pile in because they're hearing about their neighbor or somebody online getting rich. Which gets back to the very final thing I want to say. And then is the FOMO thing, right? Ultimately, maybe the most ironic thing about this whole thing is we've talked about an AI bubble and FOMO and worries about a bubble in AI stocks for years now. When over here, silver looks more like a bubble than AI ever has, in my opinion. And I want to end with a quote from your friend, an author, Morgan Housel, who I hope everybody is reading his book, because I think it's perfect. And I wrote this in a piece about, or I used it in a piece about AI, but it applies here perfectly too. Having no FOMO might be the most important investing skill. Being immune to the siren song of other people's success, especially when it is sudden, extreme, and caused by factors outside of their control, is so powerful and important that it's practically impossible to do well over time without it. If you can watch the news, if you can hear about gold and silver and say, that's nice, maybe a small allocation, but I don't need to chase that. I don't need to own everything to be successful. You win. And that was basically the punctuation mark on your blog. So, is that your big takeaway?
Yeah, you don't have to own everything, honestly. Just because something goes up, that's not a very good reason to own something. Be clear as to why you own things. Why do I own that? What is its purpose? Does it make sense in my financial plan? Be crystal clear on that. If you're not, then that's a real problem because silver and gold collapsed last week and there were massive losses. You don't want to be the one that jumps in because it's going vertical, okay? You just don't. Be smart. Play your own game.
You said it better than I ever could. Mike, thanks for hopping on with me. Everyone, thanks for watching. We'll be back next month with another episode. Talk to you guys soon.
Thanks, guys.
Thanks for watching All That Matters. Opinions expressed in this episode belong solely to Mike and Ross and do not necessarily represent the opinions of Baird. This program is for informational purposes only and should not be relied upon for any investment decisions.